income tax law and the basic understanding of income tax. So we are going to start with the basic understanding. What are the basic understandings of income tax law? So to understand income tax law, there are total 5 things that we have to understand. First is income tax law 1961. In the year 1961, income tax law enacted. Side by side, in the year 1962, income tax rules also enacted. To understand the income tax laws, different provisions. Then, Annual Finance Act. Annual Finance Act means every year in the month of February, from the Union Finance Minister, a budget declared. That budget is the Finance Act, Annual Finance Act. Every year this budget declares. And fourth, notification circulars issues from time to time. That means the tax board, that is CBDT, Central Board of Direct Taxes, issues notification circulars issues time to time to govern the persons. Now, judicial decisions. That means the Supreme Court or High Court in different cases they give their judicial definitions. In that cases, Supreme Courts and High Courts give their judicial decisions and govern us. So, from these 5 elements, we can understand the income tax law. So, income tax is a tax levied on total income of a SSC, being a person charged under the provisions of this Act for the relevant previous year. For understanding this income tax, we are going to the next slide. So next slide is for charging section. Under section 4 of Income Tax Act 1961, charging section is there. In charging section there are 3 things. First is tax shall be charged at the rates prescribed for the year by the Annual Finance Act. So Annual Finance Act is already I have defined. Rates prescribed I am going to describe in the next slides. Then the charge is on every person. Person we have to understand. Under section 231, tax is chargeable on the total income earned during the previous year and not the assessment year. So these are the things that we have to understand one by one. What are the things? First is assessment year. So what is assessment year? Assessment year is the period of 12 months starting from 1st April. So it is a period of 12 months starting from 1st April and ending on 31st March. And this is the period where the income is assessed of a person. So in the assessment year means the period of 12 months commencing on 1st April every year. The total income earned by the SSC during the previous year shall be chargeable to tax in the next year, which is termed as a assessment year. For example, suppose the previous year is 2022-23. That means in this year we earn income. So the assessment year will be 2023-24. So this is the previous year in which we earn the income, and this is the assessment year in which we assess the income. That means how much we earn and how much we have to pay the tax. Understand? Now next, previous year. Under section 3, previous year has been defined. So what is previous year? Previous is also a period of 12 months starting from 1st April, but it is not necessarily starting from 1st April. So the year in which income is earned, that is the financial year immediately preceding the assessment year, is called previous year. In the previous year we earn income and we only earn income. Tax. So this means that the tax is levied on the income in a year in which it is earned, referred as previous year. and the taxes on such income will be paid on the assessment year. So suppose that business will be started in 31st August 2022. So the previous year will be started from 31st August 2022. It is not necessary that the previous year will be started from 1st April. But for the next year, the previous year will be started from 1st April. So in the next slide, we are going to understand what is person. So person is defined in under section 2 subsection 31. The person includes 7 things. First is individual. What is the meaning of individual? Individual means a single person. That means me. I am earning salary. That means I am an individual. A person who is doing business in his shop, he is individual. He is earning something. A person who is a contractor, who earns from this contract, so he is an individual. Next is Hindu undivided family. Hindu undivided family means the persons, the family tradition, the business which is comes from the family tradition, which is coming family by family, generation by generation, that is included under Hindu undivided family. So, or the reference I would like to say that not only Hindus, all the Muslim, Jain, Sikhs, all the family businesses comes under HUF. That means Hindu undivided family. Next is company. All the companies, those are doing business on their own, those come under the company. Next, firm. Firm means here partnership firm. Partnership firm or LLP. LLP means limited liability partnership. That means partnership firm and LLP comes under firm category. Next is association of person or body of individual. Association of person means association of different category of person. That means individual, Hindu undivided family, company, firm comes under the same umbrella and do something for the society or for their own. Then it is called association of person. Next is body of individual. What is body of individual? Body of individual means only the individual peoples come under the same umbrella and doing something for their own. That is called body of individual. Next, local authority. Local authority means the panchayats, the local offices, those if they are doing some business or if they are doing for non-profit something like that, then this come under local authority. And the last category is every artificial judicial person not falling within any of the preceding sub clauses. That means mandir, masjid, girja, church, university, deity, all the things comes under artificial judicial person. These are not real. We all know that the famous Tirupati Balaji Mandir. Tirupati Balaji Mandir earns lots of money. So they are also coming under artificial judicial person. All the universities, institutes, these are come under artificial judicial person. So next, assessee. That means who is an assessee? A assessee is a person. Person means now you know that. A assessee means a person by whom any tax or any other sum of money is payable under the act. That means any tax or any other sum of money is payable under the Income Tax Act, he is called as assessee. Understand? Now, except that there are 3 categories of assessee also. So first is every person in respect of whom any proceeding under this act has been taken for the assessment of his income. That means he is not due under Income Tax Act. for any tax or any amount, but suppose any penalty or any other case is pending, then again he will be an assessee. Second category is every person who is deemed to be an assessee, who is deemed to be an assessee under any provisions of this act. Sometimes a person becomes assessee in respect of some other person, like suppose some legal heir or trustee of a trust or a legal representative of a deceased person. So he is called as a deemed to be an assessee. And the third category is every person who is deemed to be an assessee in default. Deemed to be an assessee in default. This is the third category under any provisions of the Income Tax Act. For example, for a person making any payment to other person is liable to deduct tax at sources, and if he has not deducted tax or he has deducted but not submitted to the proper authority, then he becomes deemed to be an assessee in default. Understand? Now, next, heads of income. Heads of income under section 14. To calculate total income or gross total income, we must know what are the heads of income. Heads of income, there are 5 total heads of income. That means all the type of incomes has been divided in 5 groups. First group is salaries, income from salaries, section 15 to section 17. In income from salaries, all the person, those who are receiving salaries, these income will be calculated under income from salaries under section 15 to 17. Next, income from house property. What is income from house property? Income from house property is a renting income. That means those who are rented their houses and earn income, those who are, they are assessing in that section. That means section 22 to section 27. Next category is profits and gain of business or profession. Profits and gains of business and or profession. That means those who are doing business and earning some money, those who are doing some professions and earning some money, they are assessing in these sections. That means section 28 to section 44 DB. Next is capital gains. Capital gains means those who are selling their capital properties, land, building, other jewelries, different capital properties are there. Those who are selling their capital properties on a short term basis or on a long term basis, they will be assessed under this category. That means section 45 to section 55A. And the last category is income from other sources. Income from other sources, examples are those interest income, lottery income, gaining from horse races, or any other type of income comes under this bucket. So it will be governed under section 56 to section 59. So now, how gross total income calculated? So each and every type of income will be calculated first. Then all the type of income will be added, and this will be regarded as gross total income. These 5 incomes will be total, and then gross total income is calculated. Next, and our last slide of today's, that is current income slab for a financial year 2024-25. So I have already told you that every year in the month of February, Union Finance Minister declared their budget. In that budget, that means our current finance minister, that means Mrs. Nirmala Sitharaman, declares the rates of the income tax. So this is the rate of income tax under new tax regime. So if the income is from 0 to 3 lakh, so if the total income, that means the gross total income is 0 to 3 lakh, then the tax will be 0%. That means they need no need to pay any tax. Then if the total income is from 3 lakh 1 rupees to 7 lakh, the tax rate will be 5%. If the total income is 7 lakh 1 rupees to 10 lakh, then the tax rate will be 10%. If the total income is 10 lakh 1 rupees to 12 lakh, then the income tax will be 15%. If the total income is 12 lakh 1 rupees to 15 lakh, then the tax rate will be 20%. And if the total income is above 15 lakh, then the tax rate will be 30%. And if now I am going to show you one example of how to calculate tax rates. Suppose the total income is 10 lakh rupees, then we have to divide it into different rates. Suppose first is up to 3 lakh, second is 3 lakh to 7 lakh, that means 4 lakh, and third is 3 lakh. So first 0 to 3 lakh 0%. That means in this 3 lakh we need not to pay any tax. Second, 3 lakh to 7 lakh, that means 4 lakh amount. In this 4 lakh we have to pay only 5% tax rates. And next is 7 lakh to 10 lakh. So in this 3 lakh we have to pay only 10%. So now we have to calculate, first is 0, second is 4 lakhs 5%, that means 20,000 rupees, and 3 lakhs 10%, that means 30,000 rupees. So in total we have to pay only 50,000 rupees tax. We have to only pay 50,000 rupees tax. So next example, if we are taking of some higher amount, suppose 20 lakh rupees we are taking as an example. So again we have to divide the income of 3 lakh, that is 0%. Next 3 to 4 lakh, 3 to 7 lakh, that is 4 lakh with 5%. Next 7 to 10 lakh, that means 3 lakh with 10%. Next 10 to 12 lakh, that means 2 lakh only. For 2 lakh we have to pay 15%. Next 12 lakh to 15 lakh, that means 3 lakh. For 3 lakh we have to pay 20%. And last, more than 15 lakh, that means 5 lakh, so we have to pay 30% tax. So first for 3 lakh we have to pay 0 tax. Next for 4 lakh we have to pay only 5% tax, that means 20,000. Next for 3 lakh we have to pay 30,000. Next 2 lakh we have to pay 15% tax, that means 30,000. For 3 lakh we have to pay 20% tax. I should remove this. That means 60,000. And at the end, for above 15 lakh, that means 5 lakh, I am paying 30% tax, that means 1 lakh 50,000. So if I total it, So it will be 30 plus 20 50 80 80 and 60 1 lakh 40 and 1 lakh 50. That means 2 lakh 90,000 tax totally we have to pay. So there are other provisions also there. That means section 87A and other 4% of cess we have to add on this, and there are some such. Okay, so thank you for today. Thank you very much.